Have you ever dreamed of buying something big, like the latest smartphone or a ticket to see your favorite band, but found your wallet painfully empty? Well, you're not alone. Today, we're focusing on an important tool for your finances: bank accounts. But these aren't your grandparents' bank accounts. We're talking about smart, modern ways to save, spend, and manage your money. Whether you're saving up for something epic or just trying to keep your allowance in check, understanding bank accounts is a first step. So let's dive right in. A bank account at its core is like a safe for your money, but it's a safe that can do a whole lot more than just sit there. There are different types of bank accounts, but today we're going to focus on the two you're most likely to use: checking and savings accounts. First up, checking accounts. Now, you may think of a checking account as your everyday wallet, but safer and more convenient. It's where you keep money that you plan to spend soon. Whether you're buying the latest game, grabbing a bite with friends, or saving for that concert ticket, your checking account is your go-to. Most checking accounts come with a debit card, which is like a key to access your money anytime, anywhere. You can use it to pay directly for things, withdraw cash, and even shop online. Pretty handy, right? Now, moving on to savings accounts. A savings account is where you store money that you don't need right away. Think of it as your personal treasure chest, helping you save for the future. Whether it's for a new bike, college, or even just a rainy day fund, a savings account keeps your money safe and lets it grow over time through interest. Yes, the bank actually pays you to keep your money there. And it might not be a fortune, but it's free money. But now, so why bother with a bank account? Can't you just stash your cash under your mattress? Well, maybe you could, but bank accounts offer a lot more security and opportunities. With a bank account, your money is protected. If you lose your debit card, you can report it and protect your funds. Plus, handling money through a bank account teaches you invaluable skills about managing your finances, making smart decisions, and also planning for the future. I know. Managing a bank account might seem a bit daunting at first. You might have heard about fees, minimum balances, and all that stuff. But the truth is, many banks offer student or youth accounts that often have lower fees or none at all. And they're a great way to get started with managing your own money. And now let's talk about how to choose the right bank account. It's kind of like picking out a new phone. You want the one with the features you need at the right price. Do you need a physical branch nearby? Or are you happy doing everything online? Do you want an account that earns a bit of interest, or is easy access more important? These are the kinds of questions to ask yourself. And don't be afraid to shop around. It's your money after all. So now I want to share a little story. When I got my first bank account, I was saving up for something big, a new laptop for school. I put a bit of money from my part-time job into my savings account every month. Watching that balance grow not only felt rewarding, but it also taught me a lot about patience and the power of saving. And when I finally bought that laptop, it was with my own money that I had saved up. It was an incredible feeling to have. And also, one last thing before we wrap up. Staying safe is super important. Always keep your bank information private. Strong, unique passwords for online banking, and never share your debit card PIN with anyone. You should think of your bank account like your personal diary. You wouldn't want just anyone snooping through it, right? So, bank accounts are more than just a place to stash your cash. They're a tool that can help you achieve your financial goals, big or small. Whether you're saving for something special, managing your everyday spending, or planning for the future, a bank account is your first step toward financial independence.